For much of the last 30 years, private equity investing benefited from a very unusual global environment. Globalization accelerated, interest rates remained historically low, asset prices were constantly rising, supply chains were optimized around efficiency, and capital moved relatively freely across borders. Many investors began treating those conditions as permanent. But the world looks very different today. Hi, I'm Jean-Baptiste Wautier. Over my decades in private equity and on global boards, the old private equity playbooks still matter, but they're not sufficient on their own. Investors now need to understand not only businesses and financials, but also geopolitics, supply chain, demographics, technology, societal shifts. And increasingly, those forces are becoming deeply connected. One of the biggest shifts in private equity investing is that geopolitics has moved from the background to the center of decision-making. For decades, many investors treated geopolitics as distant from day-to-day investing decisions. Today, geopolitical risk directly impacts supply chain, inflation, energy prices, labor markets, trade flows, and ultimately valuations. Companies that once optimized purely for efficiency are discovering that concentration risk, regional dependency, and strategic vulnerability all impact investments. The cheapest supply chain isn't always the safest option. Geopolitical fragmentation and shifting global alliances are changing the way investors evaluate businesses, sectors, and long-term risk exposure, both in terms of risk evaluation, but also portfolio management or opportunities. One of the biggest shifts in private equity investing is also that operational execution matters more than financial engineering. For many years, debt was inexpensive, capital was abundant, and rising valuations helped drive returns. But that environment has changed. Today, financing costs are higher, growth is harder to generate, and businesses are operating in a more uncertain space. As a result, investors are spending more time focused on operational efficiency, leadership quality, pricing power, and long-term planning. In many ways, private equity investing has become less about financial structure and more about building stronger businesses with increased strategic value. The new focus and measure of success is execution above everything else. So overall, private equity has evolved over the last decade, and its evolution differs from other forms of capital management like family offices, which are far less formulaic and also far less mature overall. In certain markets, one of the most important advantages of private equity investing is flexibility. Companies become vulnerable when they rely too heavily on one customer, one region, one supplier, or one growth strategy. To be successful and see a long-term impact, businesses need multiple ways to grow, diversified revenue streams, adaptable leadership, and space to evolve and change. The same applies to exits, as investors want optionality, whether it's going public, selling, bringing in another investor, or holding the business longer if conditions are unfavorable. Overall, optionality and adaptability have consistently been some of the most important characteristics I've looked for throughout my investing career. No one has a crystal ball. No one can time the market. So the more options you have and the more adaptable you are, the more likely you can still get a successful outcome. Private equity investing is increasingly shaped by broader social and economic change as well. Economic fragmentation and technological change are reshaping labor markets around the world. We're seeing strong growth at the top end of technology and capital, and continued growth in local service jobs. But many traditional middle-class career paths are becoming less stable. When people feel economic systems aren't working for them, trust in institutions begins to weaken. Investors can't separate markets from the societies in which those markets operate. Overall, as the world becomes more fragmented, complex, less predictable, private equity investing is entering a very different era. But these periods of disruption also create opportunity. Investors making the biggest impact will be the ones who understand how economics, politics, technology, and human behavior increasingly shape one another. If you found this discussion valuable, stay tuned for more and let me know what other topics you'd like to hear about. Thanks for watching and see you next time.